Hey everybody, Gary with Basecamp Trading. Let's take a look at something we don't talk a whole lot about. We use this in the room pretty regularly, but we don't talk about it a whole lot outside. And that's the options chain. And you can see this is the options chain for Amazon today. And stocks especially, we look at this on monthly expirations. And you can see that what we're looking for is we're looking to see how many puts, volume, and open interest there are, and how many calls, volume, and open interest. And we're looking to compare the two. And then what we look for, where is a strike price that would allow the most puts to expire worthless and the most calls to expire worthless. Our market makers are primary sellers of options. So at expiration, the more options that they can get to expire worthless, the more premium they can keep on the puts and calls that they sold. And when we came into the room today, this afternoon, we were looking at Amazon and we thought, well, the 3200 looks like kind of an area where they could inflict the most pain on the most people. Because right here you can see we had 18,500 on the put side, volume 5,000 on open interest. Now the problem with open interest is it doesn't update intraday, so we really kind of focus a little more on the volume than the open interest. But looking at this, we could see we had a lot of puts right here and below at 3,200. A little bit of volume above, but not as much as below, and definitely not enough to cover this 18,000. And on the call side, you can see that we had 22,000 calls and a bunch above that. I mean, 4,000, 12,000, 16,000. So definitely tons of volume on the call side. So again, the idea is to get as many of these puts to expire out of the money and calls to expire out of the money as possible, because again, that allows our market makers to keep the most premium. So at 3,200 even, all these 22,000 still expire worthless and at 3,200 all these 18,000 will expire worthless. And on the put side, everything below expires worthless, and on the call side, everything above expires worthless. And as you can see, look where Amazon ended up pinning for the day. But look at the chart though. This gives you an idea just how big a deal this is. With about 20 minutes to go, Amazon was down here at this 3175 area, and you were in a squeeze and kind of traveling sideways. But Amazon been kind of working its way lower, and with less than 20 minutes, or about 20 minutes to go to the bell, Amazon was still $25 off of the $3,200 pin price that we were looking for. But you can see, broke out of that squeeze and then ran right up into that 3,200 zone. And again, the market makers, they need price to finish in that area so that they can get the most puts and calls to expire worthless. And you can see one way or the other, they managed to get price up there by the close. And it wasn't really looking good for a little while there. Like I said, Amazon was $25 off of where it needed to be. But greed wins in the end. I shouldn't call it greed, but making money wins in the end. And they managed to bring it to 3,200, and not dead on, but pretty darn close. They finished this right here in this 3,200 area. Again, the options, you expired right here in this 3,200 zone. So just kind of a tool you can look at. And again, especially on options expiration day, to kind of get a feel for where an equity may end up finishing the day.